So someone dumped, and now they're...
Okay, we're live right now, so tell me. So basically, what is a teeny? It's 29 cents today? Is that what you have? Yes or no?
Yep.
All right. So basically, that was not a sell-through. That was drop the bid. 1, 2, 3 teenies times 29 cents. Just figure it 87 cents that they dropped the bid to. I buy those for one reason, because they weren't sell-throughs. So
these are corrected. The teeny for today is 43 cents.
Mine's corrected to 43 cents. I have you there, Fahrenheit.
Yep.
So 1 teeny, 2 teeny, 3 teeny.
So that's a $1.29 bid drop.
Wow. Well, whenever I see that, that's usually when they're going to try to get a reversal move up. So I always buy them. The options that we're trading right here, we are buying in at 50 cents, 60 cents, 55 cents. So basically, we're trading the options expiration, right, guys?
That's right.
And part of what we do is that the high of the day was $5.98. So does this make our entry with exactly 1 hour left, little less than 1 hour, to our benefit at the wholesale entry by waiting it out all day, knowing that during an options expiration, and you two are really good pros at it because you've gone past your apprenticeship year and you're more in your hedge fund manager year of training, and whenever they drop these like that, I buy them every time. We are trading, so, you know, that's the beginning of a 6, and we need to see it build over here. So what's your take on it, Mr. Schubeck?
Absolutely. I mean, with that one bar right there, that was a huge flash from almost 80,000 shares traded.
And just that. Oh, and that's why we buy those bottoms.
Yep, and there you go. So I mean, your average bar was bottoming it out around 10,000. Okay. And then all of a sudden you had some huge volume come in and drop that, and then at the final, I would say there was more than around 200,000 shares traded in that whole slide the bid, and now we're coming in with about I would say about 50,000, almost 60,000 off the bottom.
In volume.
In volume, yeah.
Okay. So we can see that you said that they dropped at $1.29, and the reason why we buy those is because they did not sell down like this.
No, that they dropped it almost $4 from that whole slide the bid and that whole volume scale, but that last red bar was $1.29 alone. So you have a series of almost of about 4, 5, 6 bars from 528 area down to 524.5.
Mm-hmm. I agree. And basically, when you get a 3-minute buy bar in the platform and a follow-through bar, you buy these kinds of trades because somebody is trying to set up a move. It has to have a reversal trend from that teeny down to this attempted teeny expansion off the bottom. We'll stay tuned. All right, so here we are. We've got a 3, we've got a 6. What does have to happen at a bottom like this on an options expiration right here, our entry down there at 50 pennies. The high of the day was 598. Look at the low. The public got beaten down and held them, and we bought that wholesale bid. That's what an SMF market maker does with real options trading, which is price adjusted only to wholesale to retail exit. Whenever they come, that is what we do. That's different, as you all have experienced in your past, that you will buy them, they'll start selling off. People have a tendency of becoming fearful and hold them to 0. Right now, we bought them at that price. So tell me what you see there, Mr. Plain.
I see on a 3-minute that we have ascending consolidation. This bar is starting to build right here. 1 minute chart looks great. Just got above its 20 period moving average on a 5 minute. It's finally back inside of the Bollinger Band. The lower end was 525.52. Okay. And so you can see that the lower end of the bid is slightly below that, and then the ask is about 8 cents above that. So, for these technical traders that don't like to buy things when they're outside of the Bollinger Band, that's where we like to get long and get the wholesale entries. And then now I'm sitting on 50%, flexibility on my entry.
Okay. So let me ask you this. This application called the SMF Market Maker Platform needs to bust above 25 here. And the only thing that's lagging off of this bid drop off the bottom with these two bars is another big fat green bar, just like we had going down.
Just like it's starting right now,
okay.
You mean?
Yeah, and it's got a build right here, and it's called an extension breakout. Is that what you're looking for?
That's exactly what I'm looking for. I'm looking for an extension breakout, at least 20 to 30 cents, and I need to see some volume. The last 3 minutes have just been completely anemic, but that's how these
Scotty,
moves happen.
what's the whole last total volume bar in a 3 minute? Give me the number.
This current one or the last one? We're looking at
this one here so far.
The one right here is about 8,658 building. The previous one was almost 19,000.
All right. Well, we have to get.
We're building a new one right here, starting a new one at 600 shares.
Okay.
I just put them out at 95 cents.
The VIX is at 58% on the IR. Just sitting there.
All right. So it's just sitting there.
Yep.
All right. Well, let's get back over here.
Comps at half, 54%. Nasdaq 43.
All right.
DXN 56 holding. NYSE holding at 47. Transport's holding at 70. Dow holding at 40.
That's right.
So we're holding flat.
Okay, and we're just kind of zipping up and down here as well on the 3 minute chart on Google. You can just see the little ridiculous thing. What has to happen is this half bar on the upside, guys, as you're working your trade, is, let's go ahead and pull up the hood. Let's find out what it is. It appears to me that this bar was 525.05. This one that I have up here is 526.11. So we got to, get some big volume down here in your 3 minute column there. So it doesn't look like much of anything to worry about. It's just the volume analysis part is you want to see the same kind of volume they dropped it here in these 3 minute time frames. You would like to see that upside volume during the last 45 minutes of expiration break out to its all-time highs within the trend cycle. So we've got 43 cents a teeny, 1, 2, 3, 4, 5, 6, 7. That's 8 times 4 is 320 plus add on the 3 pennies. So that's a very severe drop right there. So the counter trend is going to have the equal volume weighted breakout candle as they had through selling down the candle in volume. And it's always very important to come to the fact that when you are going to continuation breakout above the previous high, is that you would want to see that volume come right into play immediately. And it's a options expiration. There's 44 minutes left to the closing bell. The 525 call, 598. Our entries down there at 50 cents. We're a nickel above the low of the day. The public was taken to the woodshed down to our entry. And Google is trying to build a little bit of momentum. And once again, we like to show people during an expiration, because it's so valuable for the general public and the public period, is that you can really get your head handed to you in the options market if you don't know what you're doing. And our model is quite different. It's a wholesale model. So if Google doesn't continue to hold this teeny line, then I'm going to offer out slightly above what I paid. And I can throw it out over here at 85 cents, and we make 35 cents and see if someone will buy it. See, there it is right there. Brian Plain, is that your exit?
That's me.
Okay. Let's see if somebody will take him, because he's on the ask where the public has to pay him. Someone
60.
cut him, so he's going to have to go 75. And he has to work that down when it happens. He's got to learn to be on that ask during that time, because we're filling that teeny line. He needs to throw him out at 65 now. Why? See, my other guys, there they are, 65. Go sell 50, because you're not bouncing. You don't have, you don't have any choice. So let's go down to 15 cents down here, because if we're going to contract, let's wait.
You have another sell order out there. I'm canceling it for you.
Uh-oh. Sell, hey. Yeah, cancel it. How? Can you guys check and make sure that everything?
Yeah, it's all right. There was one above the mark.
So here we are, right down to the wire. We got bids out here at 10 cents, trying to get the very bottom. The chart pattern qualification in late day options expiration is that this double bottom has to happen, and there has to be an immediate explosive green bar to trigger us in here. If this does not happen, and here we are, if this final bar is not a big green bar, and it's going to keep going lower. So that double bottom did not work. We can see what the buyer and seller, and we will remain keeping the bid out here at 20 cents. So we were in, once again, they were 5.98 on the high. And the reason for it is to teach the new enrollees in the apprenticeship year trading school, market maker school, is that this is the kind of stuff that happens, and this is the power of this. It will always be a mandatory video that they have to watch, and what an options expiration can truly do to the public, who has no business being in these markets, and they will hold them to zero. Because what happens is, psychologically, is the public goes into shock because they drop and they think they're going to bounce, but they never do. Not back to their price levels up here, $2, $3, $4, forget about it. Heck, we probably won't see it. We're out at 10 cents. We're going to remain below the market, because that's what we do. We do not have any evidence of any bounce yet in the chart. Okay, because we don't. That's this third bar right here. This is printing at 0. Therefore, we have not put a bottom in. And we are very close to breaking 1.06. If I break that high, then that's going to go down. So, the low here. So if I break below 106, that's the ratio low of the day. We're right there at 105 right now. We'll remain at 10 cent bid. 0 reading, 106, 106. New enrollees will understand that when the SMF is doing, the platform is doing its thing, and these ratios break a certain way, then stocks go lower and stocks go higher. It's very clear here that you can see it. When I break lower than this number intraday, that means that Google is making a series of lower lows, and we're not done being sold off. The expiration is about, I would say 37 minutes away to the closing bell. We bids out at 10 cents on 20 contracts below the market. We're at 0. When that's at 0, you always keep that bid below the market. Wherever the lower market maker lines are, you go by the teeny down. They just sold it off another teeny, and there's 15 by 25, 20 by 15. So when we're doing these, they've got to have a quick reversal off of the bottom, so they run it up into the closing bell. Right now, Google remains very weak. The chances of that happening are very slim. However, in previous options expiration, it's done it quite well, and will remain right here on that trade. There's our bid at 10 cents. We removed the risk early on. We took a stop at 50 cents. So our stop market order was 5 cents. because we were willing to take the stop market order. That's going to give us the opportunity now to buy the 10-cent bid. We will have to have an immediate price action reversal. Otherwise, this trade will not work. However, we will remain at the bid. All right.
Yet.
Here we go. We have another attempted bottom made, right, Mr. Scotty? Right, Mr. Plain?
That's right.
And during the expiration period, we ended up getting hit at 20 cents, 25 cents in here. The thing about it is, Google must break higher here. This is the beginning of a bar, and there has to be follow-through for it to work. So during an options expiration, new enrollees in the SMF Options Market Maker School, it's very important to understand one thing, is as a market maker, you're always making the market with the public. So that's what you're doing. And you're making it at extreme wholesale prices, which is better than anything else. Because sometimes we have walked them all the way up to the tops during these options expirations. It failed here, and then we bought right down here at the bottom, and we got these at 20 pennies. Bids, ask, see, all the 20 pennies going off. They expire in 25 minutes. We're down to the wire. The reason for this special MMT Options Market Maker video is to let you know live, as you will always be involved, is making a market right down to the closing bell. They hit 15 cents. We had bids at 15 cents, but only a few went off there. So we had to pay up a nickel at 20 cents. Remember, $5.98, and we're going right into the expiration. Doesn't the public like to do that? Now, on the other hand, we've had contracts over here. This is the 520 call that expires. And you can see that the 1150 was a high and 320 was a good entry, 3.5, 330. And you can see the yield, 460 by 5, 40 pennies wide. This one here, we're finally building in the IR. And what we're looking for at bottoms is huge spikes up so that this will pay money. You never know when they're going to happen, but once again, it was the late day bottom in Google that transacted us in there for the possibility that as a market maker making it with the play, we had to be buying where they would have been selling. And so at 20 cents, they sold them to us because they probably wrote them down many dollars to where we were willing to pay for them at SMF. So we have a 3-6 bar. This has got to keep going up in value toward 25. This has to keep going in the right direction over here in the current trend ratio, new enrollees. And you'll be trained on how to use this platform. So the half bar here is 524.53. That was this half bar. And we failed it. Now we're coming back down. So you can see 524.53. We're below it, this bar. We need to build and get back above the half bar and break higher with extreme green bars like this. So on the 9 bar, it's flat. 3, 6, 9. New MMTs. And what we do is we kind of go through the bid and ask here. And we know what that half bar is, but we also know that this half bar is at 523.79. And it's easy to come down, test it, and then bounce. So with this new video for new enrollees about options expiration, we are within 23 minutes of Expiration Friday. It's a monthly expiration, new enrollees. So you're going to be going through 12 of these during your apprenticeship and trading them live.